FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
It appears that interesting things are happening in China, whether it's their real estate, empty cities, bank runs, and real estate crash in Hong Kong. We've got Bill Holter from Miles Franklin here to talk about it. Bill, welcome back.
Good morning, Kerry.
Hey, so you've drawn an interesting parallel to what happened in the U.S. in 06 and 07. Then we've had a bottoming in the U.S. since 2010. A lot of foreign money, a lot of foreign investors buying up real estate, basically getting rid of their rapidly depreciating dollars. And now a lot of that similar market action is happening in China. What's your take on things?
Well, China looks like they're, in comparison to the U.S., they look like they're hitting their 2006, 2007 moment in the real estate market. Prices are not lower than they were a year ago, but on new construction, prices are 10 and as much as 20% lower than 6 months ago. So, in other words, if you bought a house 6 months ago in a new construction area, new houses are 10 or 20% less than what you paid, which is what happened in 2006, 2007 here in the U.S. It's basically the topping of their market.
Hey, did I tell you the story? I was in Las Vegas in 2000, I guess it was 2006 or beginning of 2007, and I see on the back of every taxi cab there, it says, buy a new 3-bedroom, 2-bath townhouse, no money down, $693 or $97 a month, interest-only mortgage, and there was some asterisk on it. And I turned to my partners, I said, the real estate boom is now officially over. The crash is coming because they're now paying people to buy houses, because it occurred to me that there is no possible way that this is the sign of a healthy real estate market, that they're pretty much just giving houses away. And sure enough, within 6 months of that, it was quite apparent that the real estate market blew up. And I don't think it's gotten that bad in China. You still have to have equity, you still have to have skin in the game, but prices have gotten bid up so much. And I was just talking to Alistair McLeod, and he said that M3 in China is $25 trillion, which is more than double or triple what it is here in the U.S. And all that money, you have the quantity of money theory, all that money chasing a limited amount of real estate and goods is got to lead to inflation, I would say. Don't you think so?
Yeah, somewhere, somehow. It depends on where it shows up. Does it show up in the price of food? Does it show up in stock markets, real estate markets? The money's got to go somewhere.
Yeah, something's got to give. And you already see it in Hong Kong, where people are selling off their expensive apartments and real estate in Hong Kong to basically pay off their markers in China to the Chinese banks. And, it's just the beginning. It
is just the beginning. The actual beginning was their shadow banking system back in January with copper and iron ore that was pledged as collateral and probably pledged 5, 6, even 10 times over. That is unwinding and drying up, and that's really the catalyst for the wealthy Chinese liquidating other assets to try to pay down their markers. So it really is, it's a credit unwind.
Yeah. And when it comes to gambling, the Chinese really have no equals as a culture in the world.
No, they know how to gamble, that's for sure.
Yeah, just go to any Vegas casino, and I don't like to make generalizations about cultures, not trying to be politically correct, but from what I've seen in my travels to the casinos, the Asian mindset, they're never happy just taking their winnings and leaving. They really want to break the bank. And,
the Asians are the ones who have had the money over the last 5 years or so. So I'm sure that's part of the reason that you saw a big Asian presence in Las Vegas.
It's going to be a bit humbling that
you've seen a lot of, you mentioned the article I wrote, where dollars have actually come back to the U.S. Our market topped in 2006, 2007, and crashed through 2008, 9, and pretty much bottomed in 2010. And what you saw was foreign dollars coming into the U.S. to buy real estate. Now, there's kind of a twofold reason for that. One, it was some of that money was dirty money. Some of it was drug money or whatever. But once you put it into a piece of real estate, when you turn around and you sell it, it's clean.
Yeah.
Now you got a paper trail back to that piece of real estate. And the other aspect of that is I really believe that foreigners understand, and you're seeing it more and more that they do understand, that the dollar is a depreciating currency, and they'd rather own stuff rather than the dollars. So that's why the dollars have come back. And at one point last year, there were in the neighborhood of 70% of all real estate deals were done with cash. No mortgage, no borrowing, and that seems to have been drying up in the last 2 or 3 months. And that's why our real estate is starting to soften again, and we're probably going to have chapter 2 of our real estate crash.
Yeah, well, chapter 1 never really dried up because there's a huge shadow inventory out there. You and I have talked about it before.
That's correct.
There's millions of homes out there, and the international buyers really only concentrated on the coasts. New York, Boston to a lesser extent, Miami. Got a lot of South Americans pouring into Miami. Still, now you're going to see...
And it was higher dollar real estate.
Yeah. Now you're
It wasn't, a Kansas house for $150,000 that got foreclosed on. There's, like you said, there's millions of those that are sitting on banks in their inventories. And the problem with a house is if nobody lives in it and there's no maintenance to it in 3, 4, 5 years, which now we're out 3, 4, 5 years, they start to decay. You get one little hole in the roof and then all of a sudden it starts to spread.
Yeah, exactly. And yeah, so the coasts, LA, San Francisco, those cities, they've been doing fine, probably will continue to do okay. New York City, you see record prices there, and the commercial properties in those cities too. But yeah, it's going to get interesting real quick. And the Chinese, they bought into the same dream that the Americans bought into. It's so interesting. You said in your article, Bill, real estate only goes up. I mean, how do people keep buying into this, Bill? I just don't understand this. Even though it was true in the United States from the post-World War II era on to 2006-07, virtually without interruption, that real estate only goes up. Why do people keep believing that anything only goes up, Bill?
Well, because it did, and it did because of leverage, because new money to the Ponzi scheme could be derived from people borrowing from banks and buying properties.
And demographics too, right? Demographics
right.
Also.
I was going to mention, that's correct, because the baby boomers, there was more and more people becoming of age where they could buy a house, and of course they bought a house, so, that was demand. But But starting in the 70s, around 73, 74, you did actually have softness in some California markets, in some East Coast markets. Then, of course, the end of the 80s with the oil boom, then you saw softness as oil came down. You saw softness in the oil regions. In Texas, for example, 86, 87, 88, those were horrible years. So real estate didn't always go up everywhere, but generally speaking, in the U.S. as a whole, it always went up from, call it 1932 or 33, the bottom of the Depression, until 2006, 2007.
Yeah, that was an amazing run. And the stock market also went up. It wasn't just real estate. The stock market in successive 10-year periods, if you looked at it from 10-year periods, you took any 10-year period from...
Until 2000.
Yeah, amazing. And you could build the case, but just because it's done it before doesn't mean that it's going to do it indefinitely into the future. More on this up next on the Financial Survival Network.
FSN Radio.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
We're back with Bill Holter on the Financial Survival Network. So China's approaching their moment where, like you said before the call, roughly 20 some odd times they've seen their paper money basically turn to dust because paper does not equal money, right? What's money again, Bill? Because we need to keep reminding you the definition of money. Money's
gold or silver.
Yeah, or copper.
Well, yeah, it's copper is a problem because it's not, you have to carry too much to be worth anything. It can't be wheat because, that will eventually rot. It can't be oranges. Oil, now that's a different story. Oil, we worked the petrodollar since 1972 or 73.
Yeah.
And that's ending. But the Chinese were the ones who invented the printing press or invented paper currency, and they've blown up currencies more than any other nation on the planet. So they know what money is.
Money, basically, according to the Austrian school, basically it's got to be durable, divisible, got to be attached to some commodity that has an underlying value, a scarcity in its own right, a store of value. And clearly paper, as I love the quote by Ludwig von Mises, government is the only outfit, the only entity out there that can take a perfectly valuable commodity like paper and make it worthless by applying ink to it.
Yeah, that is a good one. Yep.
Yeah. And it's exactly what they're doing. I mean, talking about currency, what you hold in your pocket, those bills, it's currency. That is not money. Currency is a medium of exchange, and that is an aspect of money. And I hate to be repetitious. Yeah, an aspect of it. I hate to be repetitious about this stuff, Bill, but you know that unless you keep repeating it, you're just not going to, they're not going to pick up on it because because you're always getting bombarded by CNBC, by all of the mainstream media, that they talk about money till you're blue in the face, but they never talk about what it is.
Right, and you're taught from a little kid in schools.
Yeah. Oh,
that's our school system.
You mean government indoctrination centers? Is that what you're talking about, Bill?
Yeah, basically.
Yeah, and I took economics in college. I'm sure you took courses, and really glanced over the definition of money. It wasn't until I started my own educational program when I was in the business library at Pace University in New York and happened across a couple of Ludwig von Mises's books that I really learned what this stuff was. Now you can go on the internet. There's probably 15,000 sites that you can learn this from. But back then, there was nothing, Bill.
No, there wasn't. See, paper spends because someone will accept it.
Legal tender laws.
Right. Currency will spend until it doesn't spend.
Loss of faith.
Right, and then you find out what it's really worth, which is nothing.
Government.
I was going to say, you're lucky you went to school and came across an Austrian book early on. Me, I went to the University of my cousin Vinny.
Well, I always say government puts the con in confidence.
That's true.
And it's just a big con game, because until the confidence is gone, everybody's real happy to do it because it's real convenient. There's also a con in convenience, because it's so convenient to just have a pocket full of bills or have a debit card or a credit card.
Right, makes it easy.
And it's like, oh, you get held up at gunpoint? Here, have my plastic. I'm just going to call up Too Big to Fail National Bank after you get done and shut them off, and I'm not out any money. And, that is a real positive factor to it. But when push comes to shove, they're always going to make too many of these units. And, that's why the government's getting rid of the paper currency as we speak, which is the subject of this week's newsletter on the Financial Survival Network. Because when you get rid of all that paper, it all goes digital, and then you can leverage lending off of the digital currency. You can't leverage lending off of paper currency, Bill. You know that, right?
Yeah, and speaking of that, in several rural banks in China, they've actually got what looks to now be severe bank runs.
Yeah. Yep.
So you're not. They may have levered digitally, but they're going to have to show up with armored cars with paper notes to satisfy people standing at the door.
Hey, and I'll tell you one other thing. Why we will not have bank runs in the United States? It's all theoretical, because people think back to the 30s. And, the fact of the matter is, it's digital currency. People are not going to go to the bank and get notes, Federal Reserve notes. They're going to go there and get checks, right?
And any bank run will be done electronically.
Yeah. So you go and you get a card, and then you go to another Too Big to Fail national bank, and you deposit that card or that check. So what have you gotten? Which is why the sheeple will just stay home, and bank runs will just not happen in the United States. What's the point of it, right, Bill?
I don't entirely agree with that, because I do think that you're going to see some type of, maybe it'll be 3 days, 5 days, 2 weeks. I do think you're going to see some lines at banks, because the mentality is still out there that, I want to get my paper dollars out. The mentality's out there that there are people that do have some money under their mattress.
Yeah, well, it'll be a minority of people.
Yeah, it will be. And when they flip the switch, they flip the switch, and it's all over. Your cards don't work. Nothing works. Your balances are whatever they say your balances are after they reopen.
Yeah, that's it. And that it's it'll be a theoretical exercise is what I mean to say. And some people will line up. Just like, I'll give you a perfect example. I once had a good amount of money in a bank in Long Island called the Guardian National Bank. And why? I was stupid because they were paying the highest rate on CDs. And I had it up there, had it split in my name and my kids' names. And of course, the bank got taken over and closed down. They were in such bad shape they couldn't even get another bank to take it over. It's a bunch of fraud there. So I went there to go get my money because, of course, they would have mailed it to me, but I just didn't trust them. And there were people lined up there, and basically, I waited my turn. They printed out a couple of checks, and I got my checks. I lost like $1,000 in interest. At that time, the maximum insurance was $100,000, and with whatever it was, I lost $1,000 in interest because I had messed up the names on the accounts.
Okay.
So it wasn't a run because we all knew we were getting our money. It was just people lined up to get their money. So in that case, yeah, you could say it was a run because, people wanted their money, but it was more like you knew that the bank wasn't going to open up, so you had to get your money out. And the FDIC was there.
Days.
Yeah.
That was in the old days before the government was so levered that they can't afford to pay attention. It was completely different then. I mean, now the markets, now the banking system, financial system is multiples of what the Fed and Treasury can do.
Yeah.
Now, if you go back to the late 80s, early 90s with the savings and loan crisis, that was what? $1 billion or $2 billion?
And I think it was $100 billion or something.
Sorry, $100 billion or $150 billion. That was affordable. That was, 6 months of our deficit.
Yeah.
But
this
to bail this
trillions.
thing out now, you're talking about trillions and trillions and trillions of dollars, which you're putting that on top of a treasury that's already in Banana Republic land.
Mm-hmm. Yep. So
those were the old days. These are different times.
Yep, different times. So, yeah. On that note, this will be different, no doubt, but it's not going to be lines around the bank because the currency is not going to exist because they're pushing us more and more to digital currency, whether it's Bitcoin or the bank's next iteration of it. And we're all on credit cards and debit cards and EBT cards and all that. So that's just the way it's going to be. In Norway, they virtually eliminated currency. On that note, Bill, we got to get going, but we find your work, your daily newsletter, milesfranklin.com. Go to financialsurvivalnetwork.com, get our newsletter. We're coming out with Operation Dirty Money today. Sorry for the delay, but I just had to put a couple finishing touches on it. Bill, we'll talk to you again and shortly. Always a pleasure.
Look forward to it. Have a great day.
You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.